Hi everyone, it's Friday, May 17th. This is Lee McMahon from GlobalFXClub.com. This is the daily moving average video. Going to do something a little bit different for today's moving average video. Usually I run through the majors, some of the crosses, maybe even some exotics, and take a look at the moving average developments that we've had over the past 24 to 48 hours. But today we're actually going to do more of a moving average strategy video because I saw a very great example of one these past couple weeks, and I want to share it with you so you can be aware of it going forward. So that means that Sunday's moving average video, the weekend one, will wrap up this week in the moving average developments. So please take a moment to pause the recording and read the risk disclaimer, which is now on your screen, and then we'll jump to the chart. Okay, and so I have to say that I did not trade this strategy this past couple weeks. This is something I noticed while looking and reviewing my charts, so I can't really take credit for having a successful week because of it, but I do think it's worth noting and pointing out as a valid strategy. This is an hourly chart of Aussie CAD. The moving averages I have on my screen are the 50, 100, and 200 period EMAs. Those are the moving averages that I always have on my screen. You can see here around 106.44 the moving averages were flat, pointing sort of across the screen, and after that they turned and started sloping downward. That's something to notice. It just gives you a general idea of the trend, but it's not really important for our purposes today. I'm going to get rid of the 250 period EMAs because they're not necessary for what we're doing today, and I don't want to leave them on there to confuse things. So we're going to remove the 200, we're going to remove the 50, and that's going to leave us with just this green line, which is the 100 period EMA here on the hourly chart, so the 100-hour EMA. Alright, so without any concept of what we're going to be looking at, you would start back here a couple weeks ago around 106.04. You'd see, alright, we broke below the 100 period EMA, broke back above it. Alright, so now we broke below it again. We came up, we almost retested it, and we fell down. We came up, we did test it perfectly, and we fell down. This is where I'd start to pay attention to this moving average. You can see here we have a nice hammer candle. This is back maybe 2 weeks ago. At 104.88 is the price. We have a hammer falling down just after failing to test this 100 period EMA. So I'm going to mark this with an oval. This tells me that this moving average at least once was significant here on Aussie CAD. Alright, so then we're going to see the pair fall from there, rally back again, and again retreat from that 100 period EMA. Again, this one didn't come quite as close, but you can see that we remained below. Alright, then we got a significant decline. We rallied back up again, and here we put in the congestion pattern around that 100 EMA, but we failed to really convincingly break above it. I don't even think we got an hourly close above it, maybe one barely, before again the pair headed lower. At this point, you have to be keyed into the fact that this 100 period EMA is major resistance here on Aussie CAD. So here we fall again, we rally back up. Again, right here, we traded as high as 102.75, and the EMA was at 102.81. So we were 6 pips short of it. Here you had to be aware, probably would be looking to start to take a short. Take a short here, the pair collapses lower, we rally, and again, here at 101.08, we tested the moving average, headed lower again. Alright, and then here again we rallied, and we tested it for what's that? 1, 2, 3, 4, 1, 2, 3, 4, 5, 6th time here. This was just today. We tested it and again headed lower. Alright, so the strategy, I usually refer to this as a moving average being the backbone of a move lower. By what I mean is the move tracks that moving average and sort of fails to close above it. There's a couple ways that you can use this if you notice. Usually I would start to pay attention to it like after the second time we almost touched it. I would probably have tried to short here. I might have gotten stopped out as we wicked above it a couple times, but then when I saw that we moved back below it, maybe I'd look to reinitiate shorts. Certainly I would have shorted here for actually a pretty successful trade. Say you got in, maybe you gave yourself 10 pips, you got in at 102.67, you held it, you would have gotten down to, over 100 pips easily. to the bottom, it's almost 300 pips. So you can see that that would have been successful. This rally back up here, if you would have shorted that, again, would have been successful. Even just a day trade today when we got up to 1004, you could have picked up 40 pips quickly just by fading that spike up to that 100 period EMA. So that is one way you could use this moving average. If you even managed to get short up here and just add it every time down, you would have made a lot of pips over the last few weeks just trading one single moving average. What's the other thing that's very useful here about a moving average providing a backbone to a move is it lets you sort of avoid false breakouts, all right? So let's say you're looking for reversals on Aussie CAD. All right, you see we have this significant trend line that's providing nice resistance to the move lower. You see here we start to, we had a nice hammer off 99.5, we move higher. Depending on how you draw your trend line, we break this trend line. We close above this trend line. But what we didn't do is we didn't close above this 100 period EMA. So we moved higher. You start to think maybe this is the breakout I've been looking for. That 100 hour EMA comes in like it has so many times in the past and hammers price back down. Now, does that mean that this trend line is not going to be broken again and this 100 period EMA is not going to be broken again? No, of course not. At some point, we're going to move back above this 100 hour EMA and correct higher. That's the key, though, is you want to wait for it to break above that 100 EMA. You want to see it break the backbone of this move lower. Once we clear basically 100.50, which is where that EMA is sitting, we're above that trend line, we're above that key moving average, and you can maybe start to see a correction higher. You didn't really want to try to take a long here because you knew that we still had this 100 EMA sitting above the market, waiting to drive price lower for really what was the 7th time in the past 2 to 3 weeks. All right, so that's just a little bit of moving average strategy for you. It's just dynamic support and resistance, so resistance that moves with the trend. Other people, and myself included, will use moving average crossovers as a strategy as well, but don't forget the value of finding an EMA or an SMA if you prefer, that is working well with a pair in a time frame. In this particular stretch, it was the 100-hour EMA that was working with Aussie CAD. Other times, it'll be the 50-period EMA that's working with Euro Dollar, the 200-period EMA that's working with Aussie CAD, Euro Dollar, Pound Dollar. So you just find the one that's working now and ride the trend until that moving average breaks. All right, I hope that's helpful. If you have any questions, as always, come on over to globalfxclub.com. We'll be happy to talk to you there. We have a few more of these strategies that we may be sharing with you as we progress forward. So I hope that was helpful. I hope everyone has an absolutely terrific weekend, and I will talk to you soon.